Thanks, Tanya. See you then.
Thanks very much. Now, as we heard, house prices fell by 3.6% in September compared to the previous month, according to the Halifax. However, the bank said it was too early to conclude that this was the start of a sustained fall in prices. Well, let's speak to Henry Pryor, who's an independent property expert and joins us now in the studio. And thank you so much for coming in. What are your thoughts on these figures?
Well, I don't think there's going to be any surprise to see what the front page headlines tomorrow morning are going to be. This is a record one-month fall for the Halifax. The first time we've seen a number like this since the index was first started back in 1983. But we have to remember that at the moment this is the only such number. The other indices that we see, the blizzard of numbers that come out during the month, aren't actually yet showing a similar fall, and the longer term trend, whilst it is downwards, isn't perhaps quite as shocking as these numbers today.
Yes, it certainly conflicts with other statistics on this, but in terms of the reasoning, why?
Most importantly, because actually a vast number of people, we reckon about 30% of people who had their houses on the market before we all departed for our summer holidays, have reduced their guide price, their asking price. They've dialed down their aspirations for what they'd like to get for their house over the summer months. So they've relaunched them into the market in September, and it is these sales, these houses that have already started to push down on what they were hoping to get, that have sold perhaps for less, and as a result these numbers themselves are coming through at a lower level.
We said there in the introduction, the jury's still out in terms of whether it's a sustained period of prices falling. What is your thought on that? I mean, are we about to see another 12, 18 months of a trend like this?
I think that the glide path is definitely down. I don't think it will be as dramatic as the headlines tomorrow morning will suggest. Newspapers no doubt will be suggesting that we'll be pointing out the emergency exits at the front and the back. But I think actually that we're probably going to see a steady, if gradual, a slide in prices. It's not necessarily bad news for everyone. Remember that those who are looking to buy a house will benefit from this as a first-time buyer. If you're trading in the market, it's all of what you're looking to buy will probably be affected just as much as what you're trying to sell. As always, it's the poor people trying to come out to the top of the housing market, usually those who are retired, who are going to actually find that they can achieve less than they had perhaps hoped.
And you add into that, of course, the overall uncertainty with the economy. Broadly, are the two things linked until we get through that period, and we're only just starting this period of cuts? Is that not going to change the situation with house prices till we actually pass through all of that?
I fear that actually we've probably got rather more bad news to get through the remainder of this year. We saw earlier this week a report from the Financial Services Authority investigating and looking into whether they should remove and ban so-called self-certified mortgages. If they were to follow through with that, that would remove a significant number of the already few transactions that actually take place, and that would indeed put further downward pressure on house prices at a time when, as we can see from this report today, they are already starting to suffer.
Henry Pryor, thanks for coming in to talk to us. Thank you.